Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, February 16th. As always, run your video player at 1.5x for maximum efficiency. Taking a quick look at futures, not a lot going on. Bitcoin is flat. Oil's up about 1%, but that was after a 4% rug pull yesterday, so little relief rally there. Equities, I'm calling flat. Copper's up 0.6. Gold and silver aren't doing much either. Over on the macro front, we are loaded today. Retail sales, import-export prices, industrial production, business inventories, housing index, Atlanta Fed inflation expectations, oil inventories at 10:30, and then we've got FOMC minutes at 2 p.m. That'll be obviously closely watched, and I don't know if you remember last time, but very often these Fed minutes are a nothing burger, but last time there was a fairly large bearish reaction to them. Now, these notes correspond to, I believe it's January 26th meeting, so you'll have to check me on that. But at any rate, be ready for those at 2 o'clock. Over on the earnings front, we've got some interesting ones today. Before the bell, Shopify, Trade Desk, Crocs, Wix, Hilton Hotels, coming on the back of Marriott that had great numbers yesterday morning and had a big pop. Some of you might have been in that. I hope you were. Got a nice pop, trading over 180. And then after the bell, we've got NVIDIA, Applied Materials, DoorDash, Cisco, and Star Bulk Carriers in the marine transport sector. So that's a sector that's been doing well. So on the blog this morning, I've got updates for you on the oscillators. I've got an update for you on my extremometer. That's the put-call ratio. And really, I think the market has a couple of things going for it. Number one, it's OPEX week. February options expiration is Friday. And if you've got options for Friday, you should start dialing it in now as we head towards expiration. Number two, there are a lot of people that got really scared on that last swoon, and that's resulting in a lot of put buying. If you look at that at the extremometer, you'll see some the last few days some extreme put buying. Not yesterday, but last week, and even into the week before. And so people are hedged up. People have a lot of put premium that they've bought. And whenever you get that scenario, the market, it's hard for the market to go down because the market tends to do things that makes the most people lose. So when you got a lot of put exposure out there, going to be tough for the market to do a big plunge. Now, can it pull back? Can there be a headline? Of course, Ukraine. We've seen that this week already a couple times out of nowhere. You'll get that move. But structurally speaking, I think it favors the bulls right now, at least through the end of the week. So take a look at that. I've also got a couple of charts on improving breadth for the NYSE and NASDAQ. So let's get into the charts. Starting off with the SPY daily. Plunge, Fibonacci bounce, down again, back up again, down again, and here we are back at 445. I mean, this has been really choppy trading. It's really been tough to get really anything going, on a multi-day type time frame. Now you can grab something here and there and get a run, but just had a lot of chop, a lot of headline risk, a lot of stuff like that. It's been tough to really get anything going over the last couple of days. But I think for today, it's pretty clear that 445 is your pivot point. I see an open door up towards 450 where it will get tougher. But as we've seen, price has shown the ability to get all the way up to 457. So if we get any luck towards the end of the week today and going forward, we could see a push into that range again. If we get a back off on Russian troops and all that kind of stuff, I think we need a little help along the way to get up to this level. But as far as 450, I think we can, that's well within the realm of reason. And you can just see it here on the SPY 2-hour chart. The thing to watch on all of these charts really is the opening gap from yesterday. I've got the pivot here at 445. We'll have this downtrend line to contend with today. But if you're a shorter term active trader and you see this thing roll back into 442.50 at the top of this gap and that doesn't hold, I think you've absolutely got to get out of your positions at that point for active traders. And I want to see 445 hold today and at the least come back for another touch of the top of the gap. And if it does that, maybe the market can gather itself for a further advance. But bulls certainly really don't want to see that gap fill. And here we can see it blown up on a 30-minute chart. Here's where I have the pivot. Notice that the large volume over price bar aligns with that 450 level. I think this level here at 448 may pose a little resistance, but I don't think that's going to be a big deal if the market wants to move higher. This 450 will pose more of a fight. You've got a lot of resistance along this line. You can see resistance, 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 and then support, support over here, and then resistance here. So that 450 is going to take on more importance, I think, as we get up in that area. That would be a perfect place to where if you had got in at low levels yesterday or the day before and got that gap up yesterday, I would be making sure that you went to the bank at some point along the way, just as a risk control measure. Make sure you get some money in the bank and then recalibrate around 450. Moving on to the Qs. Up 2.5% yesterday. Good day. Gap and go. Here's the gap. Right up to this resistance level at around 355, 356. You can see that the next big level of overhead resistance is here at the 200 in gold, which is at 362. So right in these same levels that we've seen, and mentioned many, many times over the last couple of weeks. You can see here we had 3 days where it went up to touch the 200 and got rejected. We did have a couple days where we popped above, but then rolled right back over. So today, if we get that push up towards 363 and we're able to recapture the 200 from below, then I think you do a big recalibration around the 200. And if there's going to be something that's sustained, over the next couple days, it won't give up the 200. Once it recaptures it, then your next objective is going to be this gap fill here and potentially move a little bit higher. I don't want to get too crazy with it's going to go here, it's going to go there, but I think recapturing the 200 is a big deal. And then it's just a matter of how much power do the bulls have to run it up here and close these gaps higher. And then remember, just in the back of my head, and as budding technicians on your own, you're always wary of the breakdown, back test, the initial breakdown, revisit the scene of the crime and then come down. And that would be, this run from here to here would just like squeeze out all those shorts that are in there right now, get everybody all bullish, and then right at the point where, all our worries are over, then they head back the other way. Not a prediction, just a scenario. On the 2 hour, you see we've got this downtrend line intersecting right here with price at 355. So I think a break above here this morning would be very helpful. And then, of course, our downside worry is yesterday's gap open. You don't want to see price roll back down below 350, 250. Otherwise, the probabilities are pretty high that it would close this gap right there. And then you can see blown up here on the 30-minute chart where I've got the support and the resistance levels along with the gap from yesterday. Moving on to IWM. IWM had a nice day today. Yesterday actually led up almost 2.7%. Left a little opening gap, as all the indexes did, and right up to this level at 206. Very clear on the chart. I think 206 is your pivot, and you're looking for a move towards 209, 210 right here. You see in the last two runs, we had that, well, actually, it's closer to 208. 208 had a problem last time, and back here you see 208 had a excuse me rejection here at 208 as well, and then the big resistance comes in at 210, which as we've discussed goes back over a year. So really the key point this morning is to break above 206 and then hold it, and then open a door up towards 208, 209 as a first target. I want to welcome any new visitors to the channel. I really appreciate your time this morning. I spend a lot of time and emphasis trying to lay out the proper and correct technical levels for you to trade around. And I think, we always hear how pre-market planning can make the difference. Well, my goal here is to get you, half to 3/4 of the way home in that preparation. And when you trade a stock that I've laid out, that the levels work for you. And I'd like to think that for the most part they do. So if you appreciate that kind of analysis and setup pre-market, please hit the subscribe button and the alarm bell. Then go over in the show notes and you'll find a link to the blog site where you can register for all my content. That way, morning, noon, or night, you'll get an email anytime I publish any information. And if you happen to make a ton of money on one of these ideas, you'll also find a place to make a donation to me and Traders Profit Compass, help me keep the lights on, and to keep it going, keep me motivated. I really, really appreciate that. To my longtime listeners, thank you so much. Please pass the link along to others in your trading circle and help me grow the channel. I really appreciate it. So on Facebook, we know about the big rug pull. It's been in the news. What I did here, just to illustrate the double bottom type setup with bullish divergence, so you can kind of catalog this as a trade setup in your own work. We had our first low here, and I marked it, and I marked the posture with this vertical line. Where is momentum and where is RSI in relation to the first low? Then we rally, we find resistance, we come back down to the same low, and now with the vertical line, we mark the posture of momentum and RSI. So when we go up on the second low, we find momentum a lot higher than the first low, and we find RSI higher than the first low. So that in and of itself is a double bottom low with bullish divergence. And you can see even right here, when we came, we made a little move up, and then we came right back down to that level. Even if you were to mark this low with the vertical line, you can see that RSI just between this point and this point is higher. So there's buying going on under the surface. Now, and then the classic double bottom move is the W. Left side, middle, right side. So you'd expect a move kind of back up to test the gap again. So that is your double bottom with bullish divergence move. So going forward, if there's some wavering in price and you get it to come back to 216, you can take that long with a tight stop below and just sit there. Buy yourself some time. I wouldn't necessarily, given it's Wednesday already, I wouldn't, unless you see some kind of dynamic move, I wouldn't get it for Friday, because then you're going to be biting your fingernails all day waiting for something to happen that might not happen. So if you're going to get into something like this, you can, buy a little time and see if you get a positive move up in Facebook. This type of action kind of shows you and me that possibly the people that wanted to get out are out. The thing that would change my mind is a break of the low. If we get into big market turbulence and you break the low, then you've got to assume more people are going to come in and sell. Apple had a good day. These levels continue to work great. We had a gap above resistance up to 170. We spent quite a bit of time between 170 and 172, and then final bar of the day, we got the breakout above 172. And so now 173 is your pivot point. You get a break above 173, you got an open door towards 176 and potentially 177. But you can see 176 has been a wall back here for quite a while. So that would be my target there on Apple. Use 173 as your pivot. Tesla, gap and go. We were down here at 880. We gapped up almost to 900, then moved back into this trading range. And so today, I think you can use 920, which was the close from yesterday. Use that as your pivot and either wait for a move to 935 or wait for a pullback to 910. And those would be places where you could get long, especially on a break above 935, because you got this wall of resistance there that where price really had trouble. I would expect any kind of breakout above 935 would have a lot of power to it. Whenever you see a big wall develop, a lot of touches, a lot of rejections, that makes the breakout above that level all that more powerful, because then all of this becomes support. Microsoft. Right now, as it stands, we've got a breakdown and a back test, right? Broke down below 300, came down to the top of the gap, bounced off the gap, and right back to where the breakdown level was. So pretty clear in my mind that 300 is your pivot today. And I think if you can get a break above 300, I think you got a good risk-reward trade, because I don't see a whole lot between 300 and 308 where you've got another line of resistance. So if you could get a good entry there and set your stop, just below 300, you got $8 of upside there. I think that would be a nice trade. Amazon actually came back and filled its opening gap yesterday morning. Really didn't go up much. I mean, less than 1%. I think right here your pivot is the top of the gap, 31.12, and then your first line of resistance is right here at 31.50. If it can pop that, I think you got $50 of upside up to 3,200, and if there's some power, you got another 50 up to the top of the prior gap. So what I would worry about is a rollover back into this gap below 31.12. Then I think the door is open, especially below 3,100, coming back to 30.50. So that would be, $50 of downside as a first target. Moving on to Google. A couple things. Up 0.8%. Not really feeling it yesterday. No opening gap. You can see that this was the gap open, and really it just spent the rest of the day filling that gap. And I've got a little trend line here coming off of this low. What I'm thinking, or what the bulls want to see, is a move back into the gap, the prior gap at 27.60. Otherwise, this was a bear flag and it broke, and this has kind of a bear flag look. You wouldn't want to see price get down below 27.20, or else it's going to look like, another bear flag that broke. So use that little trend line if you're trying to trade Google, and use it as a visual reference. You want to hold 27.20, and you want to break above 27.60 to kind of get this thing showing some upward momentum. And you can see here on the momentum profile, still in the bearish regime, as is RSI. So those aren't really lending any good vibes for the upside on Google. Netflix, kind of the same deal. We had the big breakdown. We made a run up to the midpoint of the gap, and then it failed. Actually came back down and filled the gap, and now we're trapped in this little range between 410 and 397.50. So I think your go point for longs is a break above 410, and then try to clear 420, and then after that you should have a fast run up to this 440 level, I would think, if things get bullish. But until 410 can be taken out, probably going to either chop in this range or roll over if the market all of a sudden gets weak. Semis had a great day yesterday. I think it was fueled, given some extra fuel by that Intel acquisition of Tower Semiconductor. And this was one of the best. I wasn't in this trade. I missed it. But it was a really nice gap and go situation. And if you were in that, congratulations. I know some of the traders in the room were focused on AMD, and I'm gonna show you that in a minute. But this is exactly what you want to see in a gap and go situation, where you had a nice opening gap with the market, but then never looked back. And it's almost impossible. I mean, unless you were long heading in, you can't get that. But we had a level at 272.50. You could have bought that on a reclaim of a level from below, and then you were golden the rest of the day, getting, I don't know how much the gap was. Just from the gap up, you had 10 from the open, and even if you got it at 272.50, you could have got 7.5. So that was a nice trade in semiconductors. I want to show you AMD as well. One thing, let me do something here for you. Yeah, here's the refresh on that level. We came down, put in a higher low, and have been riding this up yesterday. I think you can be long against 120, looking for 124. So if you get a little pullback in the morning, a little selling, and you're able to get an entry at 120, I think that would be a nice buy for you. Why? Because notice the large volume over price profile here. That should be solid support at 120. And I wouldn't want to, I think that's a real level, and I think it's going to be firm. And if it breaks, I think it'll indicate a bigger problem. And so I would definitely be a buyer there with a stop below and be looking for 124. But up from there, it really goes in $4 increments, where I see 124 as resistance. If it can take that out, 128, and then back up to the top at 132. So if you want to trade a semiconductor, that's a nice one. Also, lots of liquidity in the chain, so you got pretty tight bid-ask spreads, so you can actively trade that pretty well. I wanted to just buzz through ARK. I noticed yesterday, and I'm using the word kind of euphemistically, all the junk was rallying. That doesn't mean Kathy Woods is junk. I'm just saying the high valuation Ponzi bubble names that we've been talking about seem to bounce the highest yesterday. When you got Amazon and Google going up, 0.7%, and you got ARK going up 5%, and you got stuff like solar that's been destroyed going up 5%, cannabis, the stuff that has just been really laid to waste over the last, 4 to 6 months, bounced the most yesterday. And probably part of that is short covering rally. So looking at ARC-F, I think it's coming right into this 333.50 area. And so kind of at the top of the range. I'm not going to take a long on this stuff, unless I see something, crazy going on. My base case is this is just a little bit of a rally within a big bear market in these stocks, and that ultimately they're going to be heading lower. Of course, timing is everything. If they're going to put in a bigger rally, you don't want to be short and be in that pain. So the key is going to be finding a level where both the market and these names start heading down again. Otherwise, it's kind of a no touch for me. Just showing you the other levels here on ARC-G. Right here at 50.75. I mean, all these charts look the same. You could alarm 51, 50.75 if you got a breakout there. It could go up into the well into the mid 50s. So you may want to alarm that if you're interested in grabbing that bounce. ARC-K recaptured its EMAs down here on the 60-minute chart. Got overhead resistance at around 77, 76, 75, right in that range. It's had trouble there before, so we'll see if it can break out there or not. And then lastly, ARC-W, the web ARC, is coming in on resistance around 98. If you wanted to alarm that for a potential breakout, that's exactly where I do it. So let's wrap it up there this morning. Remember, we got a lot of macro today, and of course that headline risk. That's always in the back of my head. Normally where I might try to do a larger position, I'm not, because it wouldn't take much out of the Ukraine, to make a giant red bar. And I just don't want to have in my active trading, some kind of big position. Even though the market looks bullish, it'll look bullish until you get that tweet, until you get that press conference, and then it won't be. So be a little cautious on your position sizes while that headline risk is out there. But as far as today, I'm going to be watching retail sales, industrial production. I think that Atlanta Fed inflation expectation number will be more important than usual. Oil inventories, and then the FOMC at 2 o'clock. So keep that one in your narrative for today. So let's wrap it up there. Looks good so far. We'll see if the bulls can keep it going. This has been Chris Buss with Traders Profit Compass. Talk to you next time.